Elon Musk and Jeff Bezos to Adam Aaron and Satya Nadella. CEOs and insiders are selling their shares, and they're doing it at a record pace. Robert Frank joins us with more on that story this morning. Robert.
Hey, Andrew. Good morning. Satya Nadella, the latest to cash in his stock, selling half of his shares for $285 million. He said it was for, quote, personal financial planning and diversification reasons, but he joins other CEOs in what is turning out to be a record year for insider stock sales. According to InsiderScore, CEOs and insiders have unloaded $69 billion in stock so far this year. That's up 28% over last year's total and up 80% over the 10-year average. Now, we're likely to see even more sales in December. That tends to be a big month for tax selling. Much of this is being driven by the super sellers. Elon Musk now up to $10 billion in his sales, with about half going to those options-related taxes and the rest for a straight cash out. Jeff Bezos also at around $10 billion for the year. That's flat with last year, but 5 times his 2019 sales. The Waltons also big sellers of Walmart with about $6 billion, followed by Mark Zuckerberg. Now, those 4 sellers alone accounting for nearly 40% of this year's total. So this is really a top-heavy phenomena. Now, one reason for all the selling is taxes. Along with the threat of higher federal taxes, Washington state is about to impose a new 7% tax on capital gains. That starts January 1st. So Nadella saves $20 million in taxes by selling now. Bezos saving $700 million in state taxes just by selling this year rather than next. Guys?
Wow. So you think, clearly the tax piece of this has to be a component of it, but then how do you explain some of the others from California?
Look, I think the federal side of this, we know that there's going to be that 5% tax on income over $10 million, or likely 8% tax on income over 25. So whether you're in California or Texas or Florida, it's likely you're going to see some kind of increase on taxes on high earners. So a lot of people getting ahead of that on the federal side. And then on the state side, it's just a bargain, especially if you live in Washington.
Robert Frank, it's fascinating. Appreciate it. When we come back, we're going to talk to Dr. Scott Gottlieb, talk about the global spread of this new variant and what it all means. He joins us right after the break. The futures ahead of the open in day 2 of Fed Chair Powell's testimony right now looking up, about 345 points up. NASDAQ looking to open higher as well, about 245 points. S&P 500 up about 60 points. We'll be right back after this.
Welcome back to Squawk Box, everybody. Take a look. Futures are pretty sharply higher this morning, gaining back not all of the losses from yesterday. The Dow yesterday was down by more than 600 points, but getting back about 340 points in the pre-session this morning. S&P futures indicated up by about 60, and the NASDAQ, you're seeing some pretty big gains there, a gain of about 252 points. If you check out some of the reopening stocks today as well, you'll see that what goes down does come back up. At least that's been the case lately. Airbnb up by about 2.3%. The cruise lines up, with Carnival up by 2.8%. Expedia, Marriott, American Airlines all looking higher as well. Joe?
Thanks. Back to CDC saying last night it plans to toughen COVID testing requirements for international travelers coming to the United States. The new order would shorten the timeline to 1 day before departure to the U.S., stricter than the previous 3-day policy for vaccinated travelers. Then joining us now, Dr. Scott Gottlieb, former FDA commissioner and a CNBC contributor. He also serves on the boards of Illumina and Pfizer. Doctor, I saw some comments from the WHO. I don't know if we've mentioned them yet. Actually, now I see the producers are sending them to, but I had already seen it. That at this point, it looks like some of the Omicron cases, at least anecdotally, some of the early indications are that it might not be any more virulent, or that it could actually be somewhat mild. Have you seen evidence pointing that way?
Yeah, look, I saw this statement from the WHO official, and I've seen some of the anecdotal reporting out of various countries. We have to remember, we've only diagnosed about 250 cases of this new variant at this point. There's a presumption that the growth in cases in South Africa is comprised of this Omicron variant, but the reality is that they were having a mini Delta surge. We don't know how brisk before this emerged, and they also had an uptick in a variant called C12, which is a variant that's been bouncing around in South Africa for quite some time, that in recent weeks seems to have been increasing in prevalence. So we don't know whether or not the increased number of cases that they're seeing is this new variant. We also have to keep in mind that testing is way up in South Africa, and they're now counting antigen tests as positive tests in their daily totals. So people made a lot of the fact that cases went from around 2,500 to 4,000 over the last 24 hours. Well, testing went from 20,000 tests to over 40,000 tests. So the positivity rate actually went down. Right now, the current epi data is consistent with a very wide range of possibilities. So inferences are being drawn to try to fit to that data. And it's possible that the data is just wrong. And so the inferences that we're drawing to try to conform to the information that we're seeing themselves are wrong.
Doctor, I'm not in the habit of reading medical journals anymore, like New England Journal of Medicine, but Len Schleifer, the CEO, Dr. Len Schleifer at Regeneron, sent me one yesterday about immunosuppressed individuals. Unfortunately, this individual had COVID for 156 days. And during that time, there were a myriad of mutations within that individual. I mean, something like 30, 40, 50 changes. And unfortunately, the individual finally passed away. But almost like an incubator for variants. And Dr. Schleifer thinks that instead of it being maybe person to person and mutating into a different variant, that it could be happening in immunosuppressed people. That's where some of the variants come from. And we need to realize that and address that. And the only way I could think about it would be through therapeutic means, because a vaccine isn't going to help someone immunosuppressed because their immune system won't respond to the vaccine. Don't we need therapeutics to deal with this?
We do, and Len's right. The variants seem to arise in people who become chronically infected with this virus, and the people who become chronically infected are those who are immunocompromised and can't clear it. One thing we should be doing, in my view, and I think Len would agree with this, is be using prophylactically the monoclonal antibody drugs. People who are immunosuppressed, immunocompromised, should be getting those drugs on a regular basis as a prophylaxis to prevent themselves from getting infected. We know they're not going to respond well to the vaccines because they don't have a robust immune system. So we basically can give them an intact immune system in a bottle in the form of those monoclonal antibodies. With respect to some of the data around the idea that this emerged in an immunocompromised patient, what now appears to be the case, when we look at the mutation and the lineage of this particular variant, it actually first emerged over a year ago, and then the trail goes cold. And then it reemerges very recently in the form of this outbreak of this new variant. It's possible that we're just picking up one cluster of this new variant, and this this variant actually emerged some time ago. Maybe it was subclinical because it wasn't causing a lot of infection. Maybe it wasn't spreading that briskly, so we weren't detecting it. But it is very curious that the lineage of this variant goes cold for over a year. And the two theories being put forward to explain that is, one, maybe it was in an animal reservoir, so this variant went into an animal, mutated there, and then reemerged sometime later. Or maybe it was in a chronically infected individual for a very extended length of time. Both could be true, but again, they're theories being designed to fit a very incomplete data set at this point.
Doctor, if the current boosters and the current vaccines aren't going to be as effective against this variant, and if we assume that there's going to be more variants in the future, if you vaccinate everyone to the current variant, are we going to have to come back? And then if we want universal vaccination, won't we have to do that for every variant if we don't help immunosuppressed people from generating variants? Will it be effective to just vaccinate everyone if it's ineffective for the new variants?
Look, we should be helping immunosuppressed people, and I think we should be using the monoclonal antibodies much more broadly. It's a tragic mistake of this crisis that we haven't used those drugs more aggressively. But variants are going to emerge. So far, the vaccines have demonstrated efficacy, significant efficacy, against a whole range of variants. I mean, think of all the variants that have emerged, and the vaccines still demonstrated efficacy. There's no reason to believe that we're going to lose them against this one. But eventually, we're going to have to migrate these vaccines, in my view, and that's one of the reasons why I think that, at least for the foreseeable future, while prevalence is still high, this is likely to become an annual vaccine for a lot of the public. But the drugs should be used more aggressively.
Becky went in, but I just want to follow up. Why would Bonsell say that this is really going to be bad and these things aren't going to work? Why would he go out and say that then if there's no reason to think that? I'm hopeful that the vaccines work too. But why would he go off? That's not a term I can use anymore. Why would he go out of the mainstream and say that if he didn't know that? Or is he just talking to people, talking out of, sort of not really in a position to talk that way?
Well, look, I don't know what data he's looking at. I'm sure he's looking at some data that's giving him that indication. The people I talk to, and you noted at the top, I'm on the board of Pfizer, feel reasonably confident. I mean, there's no guarantee of anything, but feel reasonably confident that this vaccine is going to provide a meaningful amount of efficacy against this variant. And they're basing that on modeling and simulation and also their own expertise, that the third dose in particular, after you get the booster, you get a very broad antibody response. We said that at the time that data was first announced. You develop what we call polyclonal effect. And so there's a lot of antibodies that maybe aren't going to be so good at neutralizing this new variant, but there's a lot of antibodies that still seem to be preserved. And based on that, and prior experience with reductions in the efficacy of vaccines, observing the vaccine against other variants, there's a high degree of confidence that efficacy is going to be preserved here. Will it be the same 95%? Perhaps not, but you'll still have a meaningful amount of efficacy. We're not going to lose the vaccines.
Yeah, Scott, Israel had some data that they're looking at that suggests the same. It's very early data, and I'm not sure where they're getting it, but it's suggesting the same thing. I just want to follow up very quickly on how you said we should be using these monoclonal antibodies more broadly and prophylactically for immunocompromised people. We asked Glenn about that yesterday. He said they've had their application to do just that before the FDA for 6 months and haven't heard back. With your understanding of the FDA, what do you think's happened there? Why hasn't it been approved?
Yeah, I'm not sure, quite frankly, because a lot of the people who are vulnerable and immunocompromised have basically become prisoners in their home. They recognize their vulnerability, and they're scared to go outside their homes. And this drug could be providing a measure of protection and confidence to allow many individuals to live a more normal life. There's about 3 million people in this country who are immunocompromised. All could be eligible to receive these drugs. There's certainly a cohort within that where I think it could be very important. If you're on active treatment for cancer, getting a monthly infusion of this drug could make eminent sense. I suspect the FDA is going to act on this application. I think it makes a lot of sense to have these drugs available prophylactically. They are being made available prophylactically. Regeneron is making them available under a compassionate use program, so a lot of patients are getting it. But, giving an EUA for that and that indication for this narrow use, I think makes eminent clinical sense.
Hey, Doctor, I was just curious on a very practical basis, since we've now heard about this variant, whether you are changing any of your own behavior or advising others to do so either in the workplace or otherwise. I know you're triple vaxxed boosted. I am too. I've been spending a lot of time now with other people who are vaccinated indoors and the like. and whether that should change. And also, I know there's going to be a lot of people making travel plans around Christmas and beyond. There's a whole conference series and set. We were talking about Davos and other things. What are you telling people they should be doing?
Yeah, look, I'm not changing anything. It's a foregone conclusion that this is here. I mean, looking at how this is in various other countries, I think it's inevitable that we're going to find a case here in the United States. That doesn't mean that it's spreading at any appreciable level. And I'm not convinced yet that this new variant is more contagious, more virulent, and is spreading more aggressively than Delta, or that it's going to outcompete Delta based on the very limited epi data that we're getting out of South Africa at this point. So I don't know that this is going to race around a major city if we do find an individual case or a cluster of cases. In terms of international travel, my concern around traveling internationally wouldn't be coming into contact with this new variant and being infected by it based on what I know now. I'm not more fearful of this variant than I am of any COVID variant. My concern would be getting stuck outside the country. Either you get COVID while you're traveling, unfortunately, even a mild case or an asymptomatic case, and you can't get back inside the U.S., or you get stuck in some kind of quarantine situation. So I'd be very mindful that if you're going to leave the country, have a plan B. Be prepared to stay there or get in touch with medical personnel if, in fact, you do get stuck.
It's so cold in Davos. Hey, so, all right, last don't tell me that. Pizza, 3 meals a day for doctor, that's my own problem. Let me finish with this. So you saw some of this stuff with federal judges, courts, and healthcare mandates, and there's some setbacks that we saw yesterday. Your current thinking on the most effective way to get everyone in this country vaccinated. Start on one side with its personal freedom, it's someone's choice, all the way to a universal vaccine mandate that the military is involved with. Where do you think we should try to get the most? What should our efforts be focused on to get everyone vaccinated in this country?
Yeah, look, I think that there's probably 10% of Americans that are going to fight vaccination regardless of what policies you implement, and we just need to accept that. Most of them have already had COVID, and the ones who haven't will. We need to focus on the other 85, 90%, and that means getting people boosted who've already had a vaccine. I think we need to do more to try to get more children vaccinated as well. So I think we need to shift our focus, and instead of trying to implement more mandates that I think is at this point counterproductive, just focus on the people who want to protect themselves with a vaccine, accept that the people who aren't, very small number of Americans, had COVID or will get it, and they'll have some immunity from that. And focus on getting Americans boosted. About 83% of adults have had a dose of vaccine. 85% will. We'll get to 85% quite easily, I think. And that's a significant number. The other thing I would say is we have to look at immunity in terms of the total immunity of the population. And it's true that we have a lower vaccination rate than other countries, but we've also had a lot more infection. So when you combine the immunity induced by infection and the immunity induced by vaccine, we have a lot of total immunity in our population relative to other countries. Maybe second only to the UK, which also had a lot of spread and also has distributed a lot of vaccines. So that is a factor here. We've had people who've been infected, people who've been infected and vaccinated, and then we've had people who have just been vaccinated. Yeah,
very, very quick question. Our definition of vaccinated at this point is anybody who's gotten one shot of J&J, 2 shots of the other two things. If you're more than 6 months out, what happens? Are you still considered vaccinated? Should we change our definition? That means you have to be boosted as well?
Yeah, they're not going to change the definition for the foreseeable future, because I think there's a lot of policy tied around the definition of what it means to be fully vaccinated. But I think for most Americans now, especially viewing these new variants that are emerging, when they make sort of an individual judgment about what it means to be fully vaccinated, I think it's going to include a booster, especially if you're well more than 6 months out from your original vaccine, and you're an older American who's more vulnerable.
All right, Dr. Scott Gottlieb, thank you. I didn't get to talk to you about Merck. That's not of course, then I'd be asking you about Pfizer, and you're on the board of Pfizer, and I don't need it today. Anyway, thank you, and great to have you on. By the way, he's on the board of Pfizer.
Thanks a lot.
I don't know if we mentioned that.
Yeah. And we always have more questions for him than we have time.
That's right.
All right. Big tech stocks hit hard in yesterday's trading. The Nasdaq finished the day down more than 1.5%, although it is bouncing back this morning. Alphabet and Microsoft shedding nearly $100 billion in combined market cap, but there was one bright spot. Apple and its strong cash flow surging more than 3% in the session. Joining us right now with his top picks in the sector is Mark Mahaney. He's Evercore ISI's head of internet research, and his latest book is out. It's titled Nothing But Net, and it's out right now. Mark, question for you. I know you don't cover Apple, but watching the activity yesterday, by the way, we can't call these FANG stocks anymore because they've all changed their names, so I think we need to call them Mama stocks. You've got all five of these stocks, right? The MAMAA. What happened there? The shift away from those stocks, looking at Apple as kind of being a safe haven. What would you tell people?
Well, I think investors are going to, in these kind of times when you've got uncertainty over viruses and then hints that inflation could be rising and therefore rates could be rising aggressively, I think people will rotate. Once they get back into tech, will rotate first to the highest quality tech names. So Apple would fall into that, and so would Microsoft. By the way, so would Google, so would Amazon, so would Facebook. And so the internet stocks I look at, Facebook and Amazon remain two of my top picks. I just think the valuation is relatively compelling on both of those names. And I think they both have good fundamental stories going into 22. I think they can both be somewhat recovery plays, but the stocks are somewhat dislocated. That's your opportunity. They've been amongst the highest quality internet stocks for 5 years. I think they will be for the next 5 years. On these kind of corrections, you buy leaders like that.
Mark, let me throw out a theory from someone we spoke to yesterday. We had Mike Wilson from Morgan Stanley on, and he was kind of giving his broad thesis for the overall market. That's pretty compelling. He said, look, a lot of these companies are going to do just fine. They will continue to knock out earnings, but we could be facing a situation next year where the market valuation itself is kind of reconsidered, where investors look at that and say maybe it's time to get back to more normal market valuations because we've gotten to the high end of things. If that's the case, you could have very good companies that still get punished. What do you think?
I don't think that actually happens. I mean, if you have the highest quality names that I look at in consumer tech, they've got high margins, high levels of cash, and are repurchasing stock. Google and Facebook are aggressively buying back stock. We're talking about in the tens of billions a year. Those names, I think the market will stick with those high quality names. I think Apple, the way it traded yesterday, was a little bit of a tell. You know, when times are tough, you stick with the highest quality names. They just happen to be in tech, Microsoft, Apple, Facebook, Google. So I think those stocks can outperform in this kind of market. I do look for when they're dislocated. I wouldn't argue that Google is dislocated. I think the stock can grind higher. Fundamentals are perfectly intact. I think Facebook's got a little controversy. That creates the upside. I think Amazon does too. That creates the upside.
You make a very good point that not all of the COVID winners are still winning, and a lot of the COVID losers are still losing. Is there a point where that shakes out?
I think so. And one of my top picks here, and it hasn't worked yet, and it may not work, but it's Uber. So if there's one stock, if there's one category that's still dramatically below pre-COVID levels, I mean, fundamentally, ride sharing is still 40% below pre-COVID levels. So when hopefully there is a beyond COVID moment, and when it does, and when activity kind of returns to norm sometime, hopefully next year, and we're back to regular work commutes and business travel, I mean, there's a fundamental gap up opportunity at Uber that you can find. And I think that leads to a re-rating in the stock. And what they just proved is for the first time ever, they generated positive free cash flow. That was always the overhang on Uber. But they addressed that this last quarter, and we think the free cash flow levels are going to start mounting from here for a name like Uber. So that's where you could see a real shift in valuation sentiment. I think the risk reward is extremely attractive on Uber. It's our number one pick.
Great to see you this morning, Mark. Thank you.
Thanks, Becky.
Okay, coming up, we're going to get our first read on November jobs with the ADP employment report ahead of the Big Friday report. Plus, veteran investor Jeff Finnick is going to join us to talk about how he's putting money to work in this volatile market. You don't want to miss that. And then later, we're going to talk to the CEO of Union Pacific about supply chain issues and what to expect this holiday season. Stay tuned. You're watching Squawk Box on CNBC. Good morning. Welcome to the final month of 2021. Stock futures pointing to big gains at the opening bell. Averages took big hits yesterday when Fed Chair Jay Powell teased a faster bond taper program. Just a few minutes, we're going to talk markets and stock picking in the current environment with veteran investor Jeff Finnick. We're going to get a real-time check on the American supply chain, bogged down by COVID-19, but starting to show some signs of progress. The CEO of Union Pacific's going to join us. We've got all that plus new ADP jobs data. The final hour Squawk Box begins right now.
Yeah, we're more than halfway through the week.
And more than 11/12ths of the way through the year.
Well, that's not good. But being more, that's what's weird. I like the weeks to go quickly, but I don't want anything else to go quickly.
Months and the years to go slowly, right.
Welcome back to CNBC, Squawk Box, live from the NASDAQ market site in Times Square. It's counterintuitive. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin, but at 8:30 we were halfway through. No, 7:30. At 7:30 we were halfway.
This morning.
Yes. U.S. equity futures at this hour. Let's see. Friday down 900. Monday up 300. Yeah. Yesterday down 600. Today up 322. And you can see the NASDAQ up 238 or so. S&P up 57.5. Treasury yields after Jay Powell said enough with the transitory word. Did he say let's use temporary instead, or did he say it's not transitory? That's the question.
Said it's time to retire transitory. I think you were
but
right.
does that
Never
mean
ask me again.
We admit it's not transitory, or does it mean stop using that word?
Stop using that word, and it means different things to different people.
Then
I think
why
he was
are we
frustrated with the word.
Then why are we at 147 on the 10-year?
I think he's admitting it. He's admitting it.
Well, then, and then maybe I don't know. Rates need to go up, then I guess on the short end, that's what we've been pointing out. Maybe it doesn't happen on the long end. And that's why we're still, we're not even close to 2. We're not even at 1.5 yet. So we've only been waiting like 5 years for that to happen.
Right. Waiting for Godot and continuing to wait. It is just a little under 90 minutes till the opening bell on Wall Street. Dom Chu is here. He's got a look at some of this morning's top pre-market movers, and it's like reversal day. Whatever went down yesterday goes up today.
You know, Becky, they used to tell me when I first became a parent that the days are long, but the years are short. These days, the last few days, the days have been fast as well because we've been dealing with so much of the market volatility. I feel like I blinked twice and the day is already over. But this morning, yes, the bounce backs are pretty severe, but we have a few names that are very much in the mix this morning on company-specific news. We'll start with payments processor MasterCard. A lot's been made about many of these payment fintech companies hitting 52-week lows, showing some real weakness over time. MasterCard, as you can see here, did hit a 52-week low in trading yesterday. It's up about 1.5% right now because its board has just authorized an 11% boost to its quarterly dividend payment, and it's going to add $8 billion to its stock buyback program. It's still got about $4.5 billion from a previous authorization. So when your shares hit a low, maybe you want to buy back some of your own stock. That's what MasterCard's doing. That's why there's a bid to a certain degree for those shares in MasterCard today. Also want to check out what's happening with a massive bid for shares of Ambarella. This is a company that's responsible for a lot of the semiconductors that go into camera chips for things like, smartphone cameras and cameras on computers and everything else. GoPros, that sort of thing. Ambarella is up about 15% right now. It reported results after the closing bell yesterday that both beat analyst estimates for profits and revenues. This company here may be seen as a possible leading indicator for some things like smartphone demand, computer demand. It's also been a pandemic beneficiary as people have tended to do a lot more stuff with video conferencing at home. So Ambarella shares up 15% right now. And as we do here in this third hour of Squawk, oftentimes a check on the most popular ticker searches on our website, cnbc.com, from yesterday's full session amidst that market volatility. Apple, we pointed out, one of 7 stocks in the entire S&P that was positive yesterday, adding to those gains again today. Salesforce, on the heels of that more disappointing earnings report, down 6.5%. Moderna on the vaccine side of things. Tesla, also one of those positive stocks in yesterday's session, and NVIDIA as well. Those are in the top 10, and as always, Andrew, the rest of the top 10 is on my Twitter feed at The Domino. I'll send things back over to you folks.
At the Domino. Thank you, Mr. Domino. Our first guest of the hour is a big one. Joining us right now is billionaire investor and well-followed stock picker Jeff Finnick. He's also owner of the Tampa Bay Lightning. And we're going to talk about Tampa itself in just a few minutes. But first, Jeff, we have to ask you about the markets over the past few days, how you've been thinking about it, and maybe what you've been doing about it.
Yeah, obviously it's a volatile time, and for good reason with the Omicron variant out there. I can't predict the short term. I can't predict exactly what's going to happen with this variant again, but I am optimistic that hopeful that the current the current vaccines provide some protection, at least based on what I'm reading, and if not, that these RNA vaccines have been incredible, and they'll hopefully get it out to us relatively quickly. And again, we've learned to adjust, so I don't see a significant economic hit due to it, although certain sectors like airlines do get hit. But when I look out longer term, let's say for the next 0 to 3, 0 to 5 years, I'm actually quite constructive on the financial markets. Let's talk about inflation. Transitory, not transitory. I mean, those are just words, and the market already has discounted a lot of what Jay Powell said yesterday. But when we look at inflation, I think two things are going on that's important. One, on the labor front, there are still 7 or 8, 9 million people out of the labor force. Now, all of them are not coming back in, but most of them are. It's my belief that the government has flooded so many people with money that some individuals have been able to, work on their own, become self-employed, and others are just slow to come back to the labor force. I do think we're going to see many millions of people rejoin the labor force over the next several months to several years, maybe 200,000-300,000 a month, and that's going to take the edge off the tightness in labor and labor inflation. Uber, on their last conference call, already talked about it's being a little bit easier to find drivers. On materials and on goods inflation, et cetera, even services inflation, services labor will help that, as I said, but on goods inflation, I think we're in one of the biggest pre-buying, buying ahead, stockpiling, got to get inventories panic that we've had in history, and we're right in the middle of it. And I think we are overproducing because we're producing not only for demand, which is strong, but inventories are replenishing on top of that. We're going to see the other side of that sometime in the next 3 months, 6 months, 12 months, 18 months. I see a significant manufacturing slowdown at some point over the next 24 months, which will take the edge off price pressures. So if I had to look out, I think the bond market understands this. That's why rates have stayed so low. If I had to look out over the next, 12 to 36 months, my guess is inflation is going to be 2.5% in that period of time. And I think that's going to be very friendly for the economy, for corporate profits, and for the financial markets. So I'm quite positive, looking out.
Jeff, though, does that mean that Jay Powell has been right about this? Does that mean that we've been debating, getting rid of this word transitory? Is it really transitory then after all?
I don't know what, we could all try to define transitory. I think what it means is perhaps on a long-term basis, we are moving from really low inflation of, 1 to 2%, maybe to a 2 to 3% range over the next 5 years, and then they may be a little higher after that. So I think there might be a slow turn going on. Think about the Kondratiev wave, which I won't spend time going into, but I think we are at a turn there. But how you want to, what you want to call it, I don't think is relevant as the fact that there are upward pressures on inflation right now, like materials, commodities, energy, labor, that I think are going to become less intense over the next 24 months and give us a nice respite and a period of calm, which will be great for the economy.
But let me ask you about the respite part. If we actually replenish inventories, but effectively over replenish, that could create its own slowdown too on the other side.
Yeah, no, and I see that. I see a manufacturing slowdown. In theory, you could even have a manufacturing recession on the other side. I'm not necessarily predicting that. Consumer has never been in better shape, so I do not see a recession in the overall economy in the U.S. or the world economy. But I see a period of, again, moderate inflation that's manageable and acceptable, and moderate economic growth, maybe 2 to 3% real growth in the later parts of 22, 23, 24. It's potentially Goldilocks. again.
Let's play stock picker then for a second. Is this just a buy the indexes? And I mean, if it's a Goldilocks moment, everybody wins? Or do you think you have to get selective?
Well, I'm always for, that's what my career has been based on for now 40 years, something like that. I'm always for finding good sectors that are growing their economic share, finding good stocks, good companies selling at a reasonable valuation. So I think it's always a stock picker's market. There are always stocks doing well and others not doing as well. And I recommend that again going forward. I think, I don't like to talk specific names, but I think there'll be opportunities in a whole host of sectors. Corporate America is brilliantly managed on average, and I think you'll find, I think there'll be opportunities in all different sectors.
Without hitting names directly, though, just give us a couple of the sectors where you think the opportunity will lie.
Yeah, I'll give one sector that a couple of sectors that specifically I like. One would be related to the digital cloud economy. The services, the consulting companies that, again, provide their services to these companies, not the cloud hardware or software companies necessarily, they're lagging the implementation of the systems that have been put in place, and their business is really taking off. And another one I would talk about might be the advertising industry, which for the same reasons, because of the digital economy, is having a little bit of a renaissance here. After being very, very slow growth for the last 5-10 years, it's really starting to accelerate on a secular basis, and the stocks in that are very cheap.
You want to own financials or no?
I always say 10% of stocks are buys, 5% are sells, 85% are nothings. I don't have a particularly strong opinion on financials. Frankly, I think that there's a lot of competition coming to the group. You can own a handful of them that are doing particularly well, but I think it's going to be just a tough area to economically outperform for these companies in the years ahead. Just a lot of capital.
By the way, are you a crypto guy? You're in Florida. You're not in Miami. I know. You're a Tampa guy.
Hey, crypto is going crazy here in Tampa. We haven't talked about Tampa. Tampa is on fire right now. I've talked about Tampa on CNBC for at least 5 years, maybe 8 years. I said it was going to happen. It is. What's going on in this city is incredible right now. It's more than just winning sports championships. But anyway, going back to crypto, I lean positive toward crypto. I have some crypto investments I got in years ago, but I'll tell you, I spent like 6 months trying to understand crypto and everything associated with it a number of years ago. I decided that either I'm too old or too male or too something. I just really find it difficult to understand. So I have it as part of my portfolio, but I'm the last person you want to go to for advice.
Well, let's just talk Tampa real quick. You've got this $3.5 billion project that you've been deploying down there. What is it, about 50 acres in downtown Tampa?
Yep. Yeah, it's coming along great. We're just about done with our phase one, which is over $2 billion, which is 3 residential buildings, 2 office buildings, University of South Florida School of Medicine, retail, restaurants, JW Marriott Hotel, Edition Hotel with condos. All of that we're finishing up right now. All is becoming occupied. I mean, the tailwinds down here are incredible. Our office buildings, we're talking 800,000 square feet, almost fully occupied at rents 30% above what anybody has paid in Tampa and that before. And that's because conditions are so strong here. Companies are moving here. Every week, another technology company is moving here. We have another office building ready to go that we'll start on hopefully pretty quickly. But yeah, we just have such economic tailwinds between the population, the knowledge-based jobs that are coming here. People still want to be in cities. This is a great place to live, and these tailwinds should continue. I think Tampa to Orlando to the Space Coast, fastest area of the country in terms of economic growth over the next 10 to 20 years.
Okay, well, I'm pushing for a Squawk in Tampa show. So there you go, Jeff. We'll have to do it in person.
You can come to our house. We're happy to have you.
Thanks, Jeff. Great to see you. Appreciate all your perspectives on the markets in Tampa. What's going on there? So thank you.
Thanks. Always a pleasure.
All right, let's check the futures because we're getting ready for the November ADP jobs report. We can see that we've come down a little, still above 300 though on the Dow, 230 points now on the NASDAQ. You can see the S&P indicated up about 56 points. I guess since this affects the yield curve, we'll probably let you know that the 10-year is below 1.5%. Steve Leisman has the number, which we weren't allowed to say until right now, Steve.
534,000, Joe, 534,000. ADP saying that November payrolls, private payrolls, up by 534,000. They revised down their October forecast by 1,000 to just 570,000. As you'll see, this is a bit better than expectations, which were 506,000. And it's roughly in line with that bottom number there, the non-farm payroll estimate for Friday of 573,000. But you had really good employment in the goods sector and excellent employment in the services sector. Let's take a look at it first by size. And what you'll see is that pretty well distributed, but you've had this surge in large company employment, 277, 142 on medium, and 115,000 on small business. Now, this is the interesting part by sector. Leisure, hospitality up a strong 136,000. Trade and transport. That's been a good sector, but also perhaps around the holidays it gets a little stronger. Education coming back. That has lagged in the government report. And then look at those numbers for construction and manufacturing. By any measure, those are good numbers. Joe, I'm seeing some good numbers also in the high frequency data. That suggests maybe the street, with its estimate of 573,000, could actually be a little light. The UKG numbers I looked at this morning were also very strong. And one more note, which is that ADP did a much better job last month. It's been way off during the pandemic, as has the consensus of overall economists, but they all did a better job last month. So maybe we're getting more normal now. And when you go to Tampa, I'll take you down to some of my great haunts down there. Get some ribs, Joe, at Kojak's.
You got Tampa haunts? Why do you have Tampa haunts?
One of my first jobs out of school was to be a reporter for the St. Petersburg Times in the Tampa office, where I wrote about real estate, which was so interesting.
I knew you worked at the St. Petersburg Times, but you know what I thought?